It goes both ways. It goes both ways. It's like
Mm.
it's great that you have your own research and you have your why, but you also have to remember when other people are saying, "Oh, this is a great time to buy this stock. This is a great time to invest in that." If you choose to follow, that's called herd mentality. Okay,
Mm.
it's one of the psychological mistakes that a lot of investors, especially new investors and young investors, they tend to have herd mentality. When everybody's talking about a stock, they go ahead and listen instead of doing their own independent research.
And here's the thing about investments, it's all about conviction. That maybe that person who bought something that went down is fully convinced of what he or she bought, that when it's down and everyone doesn't want to buy it, he's even buying more. But because you did not study it well and you're not convinced, you also got shaken out, and you
Yeah,
put your money where your conviction is. And that's why if you're
yeah.
not fully convinced about what it is, you're not supposed to go into it as well. Hi everyone, we are back once again with one of your favorites. We have Yaneli Espinal,
Oh.
Miss Be Helpful, back in the podcast. So Yaneli, it's been I think 3 or 4 months since the last video. How are you? How's New York? How's everything there? Elections is very very close to.
Yes, things are getting so crazy. Thank you so much for inviting me back. Everything has been going really good. I can't complain. I have no complaints. I mean, just been working a lot, doing all the same things that I'm always doing, trying to make time for my family, make time for my friends, make time for work, and also make time to rest and read and exercise and just be as normal as possible right now in this time. But I wanted to say thank you to all your subscribers because they're so sweet. They said that I look like so many different celebrities. I can't even remember. I think they say Natalie Portman and Mila Kunis. And I was like, oh my goodness, these people are so sweet. Thank you so much for all the compliments.
Okay, this is what we'll do before we begin the video. Guys, put it in the comment section. Team Natalie Portman or Team Mila Kunis. So put them down. Okay.
We'll find out. We'll have to find out.
I'll go straight into this. You are known, or at least you always tell your subscribers in your channel that you are a passive investor. And as a passive investor, there will be times that you are invested. At the point
Mhm.
that you are invested, your equity in your equity fund or your index fund or your stocks will be down, and it would experience volatility.
Right.
For people who are like you that are busy with their job or their business and they can't really look at the daily fluctuations of the market, what do you do when your stocks are down?
Yeah, I think this is going to be a temptation no matter what. Even if you're busy, you always can find some free time when you're going to be tempted to just go on the app, log into your account online because you know what's happening on the news. Everybody's talking about it on social media. You can't escape the bad news of a downtrending market. So it's kind of like impossible to avoid it and to stay away from it. And that's the moment where I feel like for me it's so important to just really try to stay busy and ignore the noise. And for me, I just always tell myself like it doesn't matter what people are talking about. Remember that you're in it for the long term. Things are going to go up and down, and you told yourself that you are okay with that, right? That's part of the deal. When you put money into the stock market, you have to be willing to know that your account balance can go down instead of up sometimes. And so I think if anything, it gets harder because you know, like you shouldn't be looking. But you know, if I'm being honest, sometimes I look anyway, and I just like look at it and go, oh man, oh. But I just try, like, even if I just look because I'm curious, I try to remember, like, just because you see things are bad doesn't mean you have to do anything. You know something now, you know what your account, okay, fine, but log out, go back to staying busy, do what you have to do, and just know, like, again, reminding yourself this is a long game. If you leave now, you're pretty much going to miss out on all the work you've been putting in and the fruits of your labor. So I just say you can check, it's okay, but don't do anything. Don't prematurely sell any investments or try to get out and run away. Just stick it through.
If there's one thing that I got from what you said, is to not react out of emotion, follow your plan,
Right.
stick it through,
Exactly.
think about the long term. My question is this, and I'm gonna tease you a bit. What are you gonna do when you see it start to drop around 30%? What will be your
Mhm.
battle plan? Do you just continue to stay the course, or will it be an action point also that it's down 30%. I think it's cheaper. Should I add some more?
If you're in a position financially where you can afford to put more, definitely always is a good option to put more, but never to take out from your account. Like, I think that's the important to this, to kind of like decipher the difference is, if I can finish paying all my bills, my rent, everything in my savings account is set and everything is taken care of, and I have extra money and I'm already doing all the things I'm supposed to do, then right now, if the market is down, great, take advantage and add a little bit extra than normal, than what you normally put in. That is never a bad move. I think that's always a good move if you can afford it. But I also find that a lot of people say, the market is down, this is a good time to buy. Buy. And then everybody starts using money that they need to buy their baby diapers to go buy more stocks. And I do think that's a really bad mistake. If you need the money for something important, maybe it's not your baby's diapers, maybe it's something else, but your bills or, next month's rent, whatever. The biggest mistake is when people get into that type of behavior where they're trying to take advantage of a low market and it's a good time to buy. It's a good time to buy. That tends to sound to me like too much like gambling behavior, right? Oh, I'm down, but I'm going to come back up. Oh, but this is a good time to get in. And honestly, if you just always put in the same amount of money every single time, no matter if the market is up, if it's down, if it's not moving anywhere, just keep on putting the amount you put. And if you can, like you said, if you can afford it to put extra money when the market's down, great, add a couple of extra, maybe whatever, $100 if you can. But I always find people, they get carried away, they can't stop themselves. So I would just say be careful there, because then you end up using money that you need for something else.
What do you say to people that when their investments are down, their friends keep telling them, you should have not bought that, your stocks are down, you should have bought this, you should have done this, you should have done this, you should have sold earlier on. What do you tell people when their friends are telling them to do something?
Whenever you put money into an investment that hopefully you did your research, you have to go back to the why. Why is it that I invested? Why did I make this investment in the first place? And go back to those reasons. And if those reasons are still strong and they still make sense and it's still an argument that you agree with and you support, then you have to be ready to hear all of the negative things that your friends have to say and still ignore them, because you do your own research for a reason. So at the end of the day, everybody's gonna have their own opinions. And that's one of the most frustrating things, but it's similar to everything in life. Like I know a lot of my friends, they have babies, right? They have children and they're married. And they always, when they start talking about how they're gonna raise their children, before they have babies, they were like, I will never do this if I have babies, I will never spank them. I will never do this. I will never hit and then you have your own babies. And that's when you find out what kind of parent you're going to be. You don't know until you actually live it. So it's always funny to me, other people, they try to give you advice about how you're supposed to do things and you're supposed to live your life. But at the end of the day, it's your money, it's your life, and it's your investment. So just make sure you stick to your gut with your research and your why. Why did you invest in it? If you still think it's a good investment, ignore everybody else. And if you think it's not a good investment anymore, then you can go back to the drawing board and see where you went wrong and what you need to do. But if you still think it's good, ignore everybody. Just ignore them, because they're always going to have something to say.
And that's what's so interesting about the market, because it's your money, it's your responsibility. And I hope people get this, that if you make a mistake, you can't also blame anyone else, because it's no one put a gun to your head that you should buy this, you should invest this. It's all on you.
It goes both ways. It's like, it's great that you have your own research and you have your why, but you also have to remember when other people are saying, oh, this is a great time to buy this stock, this is a great time to invest in that. If you choose to follow, that's called herd mentality. Okay. It's one of the psychological mistakes that a lot of investors, especially new investors and young investors, they tend to have a herd mentality. When everybody's talking about a stock, they go ahead and listen instead of doing their own independent research.
And here's the thing about investments, it's all about conviction. That maybe that person who bought something that went down is fully convinced of what he or she bought, that when it's down and everyone doesn't want to buy it, he's even buying more. But because you did not study it well and you're not convinced, you also got shaken out, and you put your money where your conviction is. And that's why if you're not fully convinced about what it is, you're not supposed to go into it as well.
I love that point you said. Conviction is so important to remember, that is what the stock market is all about. People are convincing themselves about something in the future. we have no idea if this is going to come true or not. This is our best guess. This is a hypothesis that we have, right? It's a best educated guess because you're looking at analysis, you're looking at, P&L, you're looking at so many different things. But at the same time, you're still trying to predict the future, which is pretty impossible, right? We don't have a crystal ball. And the funny thing is, like what you said just now reminds me of, I forget which YouTube video I was watching where there was an interview, and one of the investors, he was an older man, and he said that back in 2008, when everybody was talking about Lehman Brothers, before it was the huge crash and before they filed for bankruptcy, everybody was saying it's impossible for Lehman Brothers to fall apart because this is one of the biggest 4 investment banks in the United States of America. This is a huge firm. They hire over 20,000 people across the world. They are a world-renowned institution, and they've been around since 1850. So there's no way after 150 years, this company is going to fail. So even though it was going down and down and plummeting, just getting worse and worse, there were a lot of people just kept putting money in, more money, because they're like, it's going to go back up. It's going to go back up. And what happened? When they went bankrupt and the whole thing fell apart, a lot of people lost a lot of money, because they were convinced that it was impossible for such a big, successful company in the financial sector to fail.
It just reminded me of something that above and beyond conviction also, that's why we can never copy what other people are doing, because maybe their risk tolerance are different, that they can withstand a larger amount of loss at a longer period of time. Some also have a different waiting period that they already analyze it, that if this does not go up for 2 years, I'm okay with it. And if you're that cannot take that, then you have a wrong mismatch. Because I really believe this, Yaneli, it's never about what's the best investment. It's all about what investment fits you.
Yes.
And that's why Yaneli is so rich. Anyways, next question. How do you deal with your investments in times like this, that there's so much uncertainty? And here's what's interesting. I'm not even gonna mention the different candidates, but what if the person that you don't want to win wins? So how do you treat your investment when life hits you with something that's the opposite?
I'm mentally preparing myself for the roller coaster ride that the stock market is going to take when the election hit, because no matter who wins, somebody is going to think that that's going to mean something, right? Somebody's going to say, oh, this person won, so that means that this thing is going to happen, or that person won, that means that thing is going to happen. Either way, there's going to be an impact because people believe something different will happen in the future. So I have to prepare my brain now to say, okay, listen, we're going to go on a roller coaster ride. Real soon it's going to happen. No matter what goes on, the stock market is going to take a roller coaster ride. And you better buckle up and get ready, because this is going to happen no matter whether you like it or not, whether you want it to happen or you don't want it to happen, whether you're going to pay attention or if you're not going to pay attention. It doesn't matter. It's going to happen. And so by telling myself that over and over and over and over again, the day where it happens and the news goes and strike, I go like, I knew it. I knew it was going to happen. I said it. I kept on telling myself. And it's more feeling of like, okay, relief, sigh. Like I knew this was coming and I was prepared in my mind for this to happen. But what the problem is when people don't prepare them, they just keep on thinking to themselves, no, things are going to be okay. Everything is going to be fine. And then something happens, because something always happens. And then they freak out because their mind was not ready. Their mind was not thinking about that, and it wasn't prepared to handle that. And so for me, I just do that. I try to just keep on repeating myself over and over again in my head. Listen, this is coming. This is what's going to happen. And when it happens, don't do anything. Just stick to your plan. And if you feel like you want to have extra money in cash just in case of anything, then just put some extra cash aside and put maybe, whatever you've been investing and no extra. If you have enough cash, because you don't have to worry about your cash, you have plenty in a savings account and you don't really need extra cash on top of that, then maybe you want to do what you were mentioning earlier, Marvin, which is if the market is down and you want to take advantage and go ahead and put extra, then do that.
And here's the thing, that's just from a political aspect. But if you look at it also, the uncertainty is also brought about by whatever is happening because of the virus, the pandemic, and we don't know even how people are saying the cure's coming soon or the vaccine's coming soon.
Who knows?
But we don't.
Nobody really knows.
We don't know, yeah.
Exactly.
For people who are a bit scared about, not just about what's happening, but also about their investments. What do you advise them to do in the midst of all of this uncertainty?
It's about what is your risk tolerance, what are your goals, and where are you right now? Because for me, I'm the type of person where I have like all of the money for the next 6 months of my rent, my bills, my food is just sitting in a savings account. And if I need that cash, it's there and I can access it like this right away. And I won't put that money into the stock market for a reason, because I don't have that risk level where I'm willing to go to sleep and not be, not have enough cash for my next few months of living expenses. That doesn't work for me. I will be freaking out at night. So I make sure I have enough cash so I can sleep like a baby and I can dream about all the sexy people that I dream about when I'm sleeping. I dream about Will Smith a lot. Okay, I have dreams about Will Smith. But, again, it's like in my mind, I try to remember, I have to try to keep peaceful, like living. I have to be a normal person every day. I get up, I go to work, I have to do all the things I have to do, talk to my family. So I just have to try to stay normal and as much of normalcy as I can maintain. That is so important for me, to have peace of mind, to be healthy, to just be, okay, regular. So for me, I have to be honest. What is my risk level? Right now, I'm 31 years old. I have plenty of time before I know that I cannot work anymore and that I want to just focus on, my retirement or whatever thing I want to do with my life. I know that I have, 10, 15, 20 years left. So I'm not really worrying too much about taking too much risk right now. If the market drops 30, 40%, that's okay for me, because I'm 31. I'm not touching that money for 2 decades, 3 decades more. But for some people, they need the money. They were thinking like, okay, I'm going to put this money in and then I'm going to take it out in next year or 2 years so I can get a house, or maybe I want to just see if I can double my money. Or some people put it for short term. If that's you, you have to understand you went in taking a much bigger risk because you had a short term goal, and it's possible you might get lucky and hit that goal, but it's also possible that you don't. So you have to be ready to stomach that hey, maybe you do see a big drop. Now, before you put the money in, you have to ask yourself, what am I going to do if and when this happens? And if you didn't prepare yourself with those statements before you put your money in, that's when things are going to get dangerous. So those are going to be the people that probably make the wrong move. Maybe they sell everything because they're too scared. And then when the market goes up again, they're like, I can't believe I sold at the wrong time. Those are the kind of people I think that make those decisions too quickly, instead of just, waiting it out, writing it out, and make sure you have the right risk level in your portfolio. If you're taking on too much stocks and you have put too much money towards that, you need to know and you need to be honest with yourself, because, too many people make that mistake. They put too much stocks, or maybe they don't put enough stocks. Maybe they're young and they're too scared. And then they all have all these bonds and all of these, how many people tell me they have money market funds? I'm like, market fund, that's a joke. You're not getting any money from that. Like, that's basically a glorified savings account. In a lot of savings accounts today even give you more than a money market fund in a return. So when I hear that, young people telling me they put their money in a money market fund, my heart, it breaks. I'm like, no, you're wasting your money, your time. Like, you have to go for more risk. So it's not about more or less risk. It's like you said, it's the right level of risk for you and your situation.
What about people with very, very long time frames, and then they convince themselves, I'm in this for the long term, but 6 months after, the performance of their stocks or their investments are not doing so well, then they suddenly take short term.
Yes, so, that's a lot of people. So, that's very common.
Because a lot of people are long term when things are doing well, but they're short term when things are not doing well.
I think that those are going to be the moments where you're going to learn the most, right? It's kind of like the funny story, the example of what I was saying with parenting. Is that when you don't have kids, you think you're going to be this kind of parent. And then when you have your own baby, that's the real test. When the baby is in your arms and you're the parent, that's when the test hits. Same thing like what you said. When you're doing your planning and you go, okay, I'm going to be a long-term investor. I know it. I'm going to put this money. I won't touch it. Well, you don't know yet. This is you blabbering about what you think you're going to do. But the test comes when the market is down. That's when you're going to see, are you sweating? Are you sweating? Are you freaking out? Is your stomach? Are you sick? Those feelings, that's going to show you if you're really somebody who can tolerate the high risk and you're in it for the long term, or if you cannot take that much risk because you're going to go crazy, and then maybe you need to roll down and be a little bit less risky with your investments, because it's not always about how much time you have. It's also about what you're comfortable with. If you're going to freak out every single time the market drops, you're going to go to the hospital. You're going to have a stress-induced heart attack or something. You can't do that to yourself. You have to be honest about what you are willing to handle every time the market is going up and always going down and up and up and down and up and down, because that's normal. It's going to happen whether you like it or not.
I hope you guys are learning. If you guys have any questions, just feel free to put them in the comment section. I'm learning also while you're talking. Here's another question, and I want a lot of people to listen to this. Now, long-term investor, uncertainty, volatility, their positions are down. Should they sell at a loss?
It depends. What's their situation with their cash? Are they desperately in need of accessing cash? Because for me, I don't think you need to touch your investments if you have cash. The problem for me is that when I find out people, they don't have any cash reserve, they don't have no money saved up in cash, and then when they need some money for something, maybe they can't make the mortgage, or maybe they can't make their rent, or they desperately need cash to save their business from going down under, then they're like, where am I supposed to get this cash from? I didn't have enough runway in my business, and I don't want my business to fail, so I have to take out these investment, take out this money from my investment so I can save my business. These are the types of events that happen where people need to go back to the stocks and liquidate it, but they usually happens in the worst times. So for me, it's not about like if your risk tolerance is correct, if your timeline is correct. It's also about, do you have enough cash to make sure that if any unexpected emergencies was to pop up with your business, with your children, with your mortgage, with your responsibilities, anything, that you can cover that with the cash that you have. And if you're not comfortable to say, yes, you know what, I have enough cash, I got a big pile of cash that's just sitting there for any emergency, then maybe you are still taking on too much risk, even if your quote unquote risk tolerance is correct in terms of how many stocks and how many bonds is right. But just because your allocation is correct doesn't mean that you have everything in your ducks in order, like they say, because you need to make sure you have enough money in cash first so that you can fall back on that in an emergency, and you don't end up running to your account, to your investment account, to liquidate stocks and bonds because you're so desperate for cash wherever you can get it. That's usually the worst time to go and sell investments.
If you plan your finances right, you plan and structure your investments right, when times of uncertainty will happen, you have enough cash also to support your short-term needs, and in the same way, you don't have to touch your investments.
There's this Market Watch article that I was reading a few, maybe like a year ago already. And the cool thing is there's a chart in the article that shows all of the different historical events that have affected the stock market because of the way that people, they just see that, oh, this is going to affect everything. This is going to impact everything. So then the stock market drops. Or they think, oh, this is great for our country. The stock market goes up. And I'm talking about specifically the United States stock market, but of course there's stock markets all around the world. And when I'm talking about the US one, you really can see in the chart goes up and down, up and down, up and down, like a zigzag line, like a roller coaster. And so to me, it's like, you have to know that is going to happen. It is a fact. It has always happened, every single era before this one, and nothing is going to change about that all of a sudden, right? So you have to make sure that you've done your financial planning, like you said. But I think the hard part about it is a lot of people, they don't know what financial planning means or what it looks like. Like when I say have a lot of cash in the bank, okay, but how much cash? Am I supposed to have $1,000 or $5,000 or $10,000? Am I supposed to? And it's such a personal decision, which is why it's hard for me to answer that question, for me to say, oh, you should have exactly this many dollars, because it depends. Do you have a business? Do you have children? Do you own your home? Do you rent your home? How much do you usually spend on your groceries? Do you have you see, it's so personalized. Nobody can answer that question for you except you. You have to sit down, look at everything in your life that you spend money on, and run the numbers and say, okay, how much money do I need to feel comfortable? Maybe 1 month of living expenses, 1 month of business runway, maybe 2 months, 3, 5 months. Some people very conservative, like me. They need 6 months of rent to feel comfortable. Some people, they're okay with just 1 month or 2 months. So you have to know yourself. What are you okay with? And then make a plan that works for you. But as long as you're doing that financial planning for yourself, that's all that matters. That's all you can really do, is just take care of yourself and your family, of course, too.
Since this interview is quite good enough already, I have a bit more questions for Yaneli, but we'll reserve that for the next video. Let's see how she saves, how she invests, how she allocates her money as well. So that's something to wait for. That's something for you guys to also stay tuned for. So thank you so much, Yaneli Espinal. Miss Be Helpful, link is in the description if you want to follow her, and everything that she mentioned about financial planning, there's only one way for you to be good at it. Subscribe to her YouTube channel and smash the like button so that you see more of her as well. So thank you so much, and see you in the next video. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.